Hey, good morning, everybody. 8:48 on, and I'm a couple minutes late. Sorry about that. June 10th, 2020. Happy bump day to you. Obviously, bump day, my reference to what the market normally does here on Wednesdays, bumps higher. Somebody's going to give me a knock knock. Glad to see everybody checking out who's in the room here with us real quickly. Pablo, James. Hey, James, how you doing? Andrew, Richard. Nice. Excellent. Jesus is here with us. Benjamin. All right. We've got the cast of usual suspects here. Zachary's with us from Minnesota. Everything sounds good, I hope. Excellent. Thank you very much, James. Where's Daniel? Daniel usually gives us the double knock here very quickly. Knock, knock, knock. So, what are we going to talk about today? Well, obviously, the Fed's coming up at 2 o'clock. You've got a chairman from the you got the chairman that's going to have his press conference at 2:30. That's what everybody's going to be focused on. There's a lot for him to talk about. We're going to hit that, as well as what's going on with futures overnight. Last night, we saw futures that were trading up higher. When I was going to bed, I think we're up about 0.5%, maybe 60 basis points. Dipped into positive or negative territory. Dipped into the negative territory, on the S&P 500 across the board, really, and then came right back up again. And this was after a report came out this morning that we'll talk about. And then finally, I'm going to go through some buy, hold, sells on today's headlines. Something a little bit different. Usually I try to hit a couple of stocks in a sector, but today we're going to have headline stocks, buy, hold, sell. One of them's Tesla, so you're going to want to hang on for that as well. And a little chat about volatility of volatility. I'm going to geek out a little bit on you with the volatility of volatility and what it means for you and how you can handle it with your portfolio over the next, let's call it 4 weeks, maybe even 6 weeks or so. With that, there's Andrew with the knock knock. All right. Here we go. I'm going to go to the slides right now. As I said, swinging futures contracts this morning, we're going to discuss what to expect from the Fed today. I'm going to give you a couple different views of this. First of all, what the bond market's telling us, and there's something that's a little bit nefarious in the numbers and what I'm seeing in terms of bonds dropping here. Obviously, the risk on trade has helped that happen, but you got to think about a word that comes up every once in a while, starts with a stag and ends with inflation. We'll talk about that for a second. Volatility of volatility, stocks and news this morning. Then, of course, we're going to do your ticker blitz. I'm going to take as many ticker symbols as I can, give you a little fast, quick on them. Hey, Kevin, give you a little fast, quick overview of what I think of the chart and send you on your day to make some money in today's trading day. So this morning's futures swing. It really was a swing. If you looked last night before you went to bed, or if you woke up in the middle of the night and checked them, they were up about 60 basis points or so in the S&P 500. That dropped down in the negative territory. So did the Dow. The NASDAQ has been doing exactly. Hey, Jerry. Happy bump day. NASDAQ has been doing exactly what it's doing, which is just bootstrapping and staying in positive territory here. For the OECD, for those of you that don't know, that is the Organization for Economic Cooperation and Development. They released their report about 7:30 this morning. The report, and this is on the outlook of the global economy, their forecast. The global forecast detailed a prediction of a 6% slump in global economic activity this year. Obviously, that pushes them to say that we're going to need to see stimulus measures from central banks continue. So, in other words, the Fed needs to keep pumping. At 7.6% contraction is expected if there's a second wave of the COVID-19 virus. So something to keep an eye on as we see news about Texas right now being one of the hot spots here. Dr. Fauci was out yesterday saying, we may not be done. It's kind of been wishy-washy here, quite frankly. The WHO saying that, they don't see it transmitted as easily as they initially thought. And then they kind of backtracked on that yesterday. This is kind of a mishmash of headlines that we're seeing around COVID-19 globally, not just here in the United States. And it's a little bit understood because it dropped out of the 24/7 news cycle here for the last 2 weeks here. Quebec. All right. Like Quebec, Canada. Quebec, however you'd like to say it. My I'll side note here for a second because NHL news is very important. My Penguins are going to be taking on the Montreal Canadiens, Les Habitants, here in a couple of weeks when they open up the season. So one of a little bit of a Canada connection there, little bit. Anyhow, I digress. There's a second wave of the virus. Obviously, people are looking at this now as more of a probability since we're seeing some of the numbers come up here. So we're really going to have to watch things over the next couple of weeks in terms of the reopening and the COVID-19 possibility of a resurgence. So what happened? The report caused a pause in the futures rally. We saw a sell-off broadly. NASDAQ stayed positive. More importantly, oil and other commodities shed their gains. Check out the dollar. Yes, Don, go Pens. Check out the dollar. It's dropping right now. Check out oil. We're 2.5% lower. 2.5% lower. We talked about a 15% drop in the recent top in oil prices yesterday. I think this is truly on its way happening. You should be playing this right now, either in the energy stock complex, or if you like, you can go out and play a couple of different ETFs that are long and short on oil, either Brent or WTI. The dollar continues its slide, which I'm actually looking at very closely. The dollar is really starting to pick up a little momentum to the downside here. So Dow Jones futures lost their overnight gains. This is the bottom line. We're kind of right now 47 points up. If you look at the futures and where we would open, it was up at 9 a few minutes ago. Jerry talks about the magic market. Obviously, the magic market is a little bit in play this morning, but I think what everybody's waiting for is 2 o'clock and what we're going to see at the Fed. Here's the chart. Hey, Charles, here's the chart that I promise to show you every day. S&P 500 right now with all its critical trend lines. You got the 200-day that's starting to actually turn up a little bit, the 20-day breaking above. That's what I call a little silver cross sometimes. Usually the silver cross happens right here, the 20 over the 50-day. But 20 crossing above the 200-day, what's all this mean? Well, right now I'm putting these aside because the RSI right now and the S&P 500 still overbought. Volume's dropping a little bit. Watch the volume today, especially with a Fed announcement. We should see a spike in volume this afternoon that is going to take the S&P 500 ETF, the QQQs, the IWM higher. If it doesn't happen, it tells you that we're in that price vacuum that I talked about, trading up here in that rarefied air, 3,200 on the S&P 500. Immediately, you start to look at 3,100 as the next target for the S&P 500. So that's your chart view of the day. So what do you expect about them? And look at this. Jerry comes in with the question, don't think Powell will say much than what he said before. Fed will do whatever it takes to stabilize. As I put up the screen that says what to expect from the Fed this afternoon. Good timing, Jerry. The Federal Open Markets Committee is going to release its quarterly forecast since December. This is the first one. So a little more meat to what we're going to see with today's meeting. We're actually going to see what their forecast is. And this is the first time it's a quarterly forecast. This is the first time we'll see it since December. So expect the market to be sitting on pins and needles a little bit. I think that's why we're seeing stocks rally right now, because exactly what Jerry said, you're actually going to see the Fed kind of not reinvigorate, but make sure that they back up what they're saying with keeping liquidity in the market. So what the expectations for, and this is kind of moot, really. The expectation for interest rate, they're going to keep it firm at 0 to quarter basis point. When you look at the Fed fund futures, this is what has been telecast for the last couple of weeks. We're not going to see a change in interest rates. And Jerome Powell in the last meeting and a couple other times has actually said, good morning, Scott, we're not going to see a drop in interest rates below 0. So he wants to keep that as the floor. Expect to see them to hold the emergency stimulus programs at their current levels to maintain liquidity in the credit market. I also expect them to go a little bit further because everybody's talking about a resurgence of the COVID-19 and because of this report that we saw today, and really reassure the markets that the Fed has checks in their checkbook and they're going to continue to write them. That should get the market excited a little bit. But there's a but here. The bond markets have seen an uptick in rates, and we'll look at the 10-year across all year. Let's look at the 10-year right now. There's a 10-year over the last week. You can see us popping right now. So we went from 70 basis points up to 90, and then we're pulling back down again, 80 basis points. Remember, we were trolling around 60 basis points just a couple of weeks ago when investors had the risk on trade off. So they weren't that interested in taking risk. Obviously, we saw a jump. Right here, though, this jump is because of that jobs number. We saw that incredible jobs number on Friday, and the reason that we saw interest rates come off is people start thinking, okay, this is truly a risk on trade. I'm going to get out of treasuries and start migrating over to equities. We're seeing that pull back ahead of the Fed because the Fed's going to splash water on that. But in terms of what to expect here, this is the largest spike in the 10-year. Sorry, I'm a little bit off. We've seen an uptick in rates. The move represents a risk on trades return, but also suggests that either traders expect the Fed to relax their outlook or that inflation is on its way. Yes, Powell does speak at 2:30, and I've got that on my last slide here. So we're going to want to see the Fed address the inflation risk since we've seen an uptick in the 10-year. We've seen it across the board. The 2 go up. We want to see them address that, Powell to address that and say, this is what's going on. Because the combination of higher interest rates, higher unemployment, and low demand or growth, which we're obviously forecasting right now, equals stagflation, which is a bad 4-letter word for the market. And we'll just call it stag so it can be a 4-letter word. But that equals stagflation. That combination of stagflation, that would be one of the things that a little bit down the road here, and we're talking a few months, would start to concern traders to the point that this would start to pull money away from equities. So I'd love to hear your thoughts on the last week's job report, and I think that's what we're going to see. It's coming up during the 2:30 press conference, the decision to 2 o'clock, what they're going to release in terms of interest rate, their policy decision, and then 2:30 you're going to see Jerome Powell. And let me just say this, it's always a pleasure to watch Jerome Powell when he's doing these press conferences. If you haven't watched it before, watch him because he answers everything very succinctly, eloquently. He's a great speaker. He handles the questions. He takes them all on. And you're going to see him, I think, get hammered with some questions. Not hammered, that's a bad word. Peppered, maybe, with some questions here during this press conference, simply because there are questions about that jobs report, the unemployment rate, interest rates going higher, inflation right now. And we do see inflation creeping in with fuel prices, food prices. Our basket of groceries, as they taught us back in the 8th grade economics classes, are starting to get more expensive. So make sure you take in a little bit of it or read a little bit about what he said after the fact, because it's going to be some important market moving news. So he does send Scott. And one of my, here's another little hint for you. This goes back, I don't know, maybe 15 years. I had someone teach me this trick or actually tell me about this trick. So when you watch these Fed announcements, and they're a little different than they were then, obviously. You didn't have the press conferences. You just had Alan Greenspan blasting out the what we would call a tweet right now, but it was a headline. That was all. So when you watch these, take a reversal cue from what the market does in the first 10 to 15 minutes of trading. So if we rally huge, if you day traders out there are feeling up to it, you go ahead and you short after that, because 9 times out of 10, that is going to correct itself back down. Typically, if we rally huge out of these numbers, you end up seeing a market that closed lower than it was before the actual announcement. Just one of those things that you learn over trading for 30 years here is that you always take the opposite side of the reaction, the initial reaction to the Fed's announcement. So the Fed comes out and says, hey, we're going to do this and this and this. Let's say the market goes up 1%. It's not a bad time if you're a day trader. And this is, I'm not recommending it for everybody out there, but if you're aggressive, and obviously we've got a few of you in the crowd, you go ahead and you short into that a little bit and you pick up a few points on either the minis or whatever you're trading before the close. It's kind of a fun little trade and it works very often. Let's go back to the screen before I get out in the weeds with you, though. So we've got what to expect from the Fed. We really want to hear Powell talk. Let's geek out for a minute on some numbers. The volatility of volatility. Yesterday I said the VIX was hitting some relative lows. This is the volatility. So is the volatility of the fear gauge. So we're talking second derivative stuff, which is kind of fun for me. If you look at what we've got here, the 20-day standard deviation of the VIX, which is a simple measure of the volatility. I usually use historical volatility, but it's a little harder to pull up. The VIX has now dropped to its lowest levels in February. So the volatility of the volatility has dropped. Historically, the squashing of volatility represents the quiet before the storm for the market. So you can have low VIX numbers and still have volatility in those VIX numbers, and usually that's fine. But when it quiets down, the actual readings of the VIX, it tells you that spring is getting compressed. And right now it's happening at the 200-day moving average and at the 25 level. The 25 level is key. That's where we broke above and just started taking off in February. Now we're retesting that area, and you've got that support from the 200-day. And believe it or not, you can actually trade the technicals on the VIX. We had a huge discussion. I worked for a gentleman in the options industry, and this is back in 98 that I started working. October of 98, I started working for him. Went to the SIBO, talked to them about the VIX, and this was just when the VIX was unheard of. And you couldn't trade technicals on it because not everybody watched it. Now this is a widely watched index, so you can trade technicals on it the way you can the S&P 500. So the 200 days is a big deal. That's my point. But down here, you see this little squashing, this line that's come down. That's that standard deviation reading, 20 days. That's taken into account. And you can see we're heading down to our lowest level since we've been there in February. That concerns me. As I said, and let's go back to the tape here, historically, the squashing of that volatility means you're going to have an increase in volatility. What's that mean? How do you play it here? So consider a trade on increased volatility over the next few weeks. Call it a hedge, call it whatever you want. I call it an actual opportunity on volatility. Go long volatility. Watch for a break above 28.75 on the VIX. That's going to signal that we're going to see a continuation of this short-term spike, and it's going to move higher. My target then turns to 35 on the VIX. ETFs that provide a volatility hedge include the VXN. If you just want to go out and simply buy a volatility hedge, VXN is a place to go. More aggressive traders can consider a volatility hedge using options. My night trader system just added one yesterday. I put the recommendation out in. I'm fine with the VIX dropping as I'm speaking, and it's probably because you see the QQQ and a couple of other things trading much higher. The S&P 500 is actually up 10 points now. Magic market, Jerry. Anyhow. I'm fine with it dropping right now because I'm more concerned with where it goes throughout the day. And frankly, I'm concerned with where it goes a week or two from now. I don't need it to go up this moment. A hedge is a hedge, or a volatility play is a volatility play. I don't buy Tesla today and then sell it halfway through the day because it didn't go up. So right now, that volatility hedge looks to be something that you play out for 4, maybe 5 weeks here. More aggressive traders may consider that volatility hedge to be an option as we move forward. So speaking of pre-market activity in the volatility index, let's talk about a few stocks in the news this morning. So Etsy, one of my fast profit stocks actually from months ago, which the recommendation on this is a mind-blowing number. I was just told this last night or yesterday. The recommendation that I gave for an option on this, and if you're not watching my fast profit videos, please check them out, but it's up 600 and some odd %. So I recommended Etsy back in, it was April, right when we were coming out of this. No, I'm sorry, it was March, and we rode it through this this dip, and now we're trading at more than a 600, and that's a fantastic trade. Etsy's one of those at-home stocks, obviously. We're worried about a second breakout of the COVID-19, and forget about that. We're just not seeing people wanting to jump out and go shopping, and we've changed habits. We hear about how things have changed. We've changed our habits on how we shop. Etsy's one of the things that, as I've talked about, the $3,000 canoe. You got everything at your fingertips. A lot of people like to support artists, et cetera, et cetera. This is a great way to go. It got upgraded from Jefferies. Target raised to $110. I agree with the target. I don't think you see it for another 6 to 9 months or so. This is a stock that continues to maintain a buy rating for my technical score, also a best in breed score right now. Etsy right now, you stay long. It should be a stock that's in a portfolio for long-term holds here. Love the upgrade today. You're going to see the stock take out that 85 level in short order. On the other side of things, United Airlines downgraded to neutral from overweight at JP Morgan. You're going to see a lot of the banks coming out now saying, hey, airline stocks have been too inflated too quickly here, and that's exactly what JP Morgan. They've got a target of $43, which hit yesterday. You know how these targets work with the banks. Typically, that's something that they're looking out over the next 6 months, even 12 months. JP Morgan is saying you've got even money right now if you look over the next 6 months to 12 months or so. So, look at this. The Head and Shoulders. I had to go back to Etsy just so that you can let's see here. Hold on a second. Etsy looks like a Head and Shoulders. Yep, right here, neckline at $75. It's a little bit hard to see, but I can see a neckline here. I don't see really the head, the first set of shoulders, not that I'm going to start to get into. This just looks like it could be a double bottom. Or you're right, there could be somewhat of a Head and Shoulders here. Stop about that. I still like Etsy. I like Etsy the long side. VIX.X, I believe, Dave, is what you're going to find in TD Ameritrade for the ticker symbol. Somebody was chiming in on that yesterday during our 11 o'clock night trader session, live stream session. United Airlines downgraded, though. We talked about even money. I like United to touch down to 35 here over the next couple of weeks. I think the airlines have just gone too far, too fast. And once again, you're seeing everything drop off again. So next one, Delta Airlines. They released this morning news that they're seeing their second quarter revenues declining by 90% year over year. 90% year over year. Originally, that number was in the 70s. Now they've gone up to 90. Obviously, right now their capacity is much lower than everybody expected. And remember, these airline companies in a couple of months are still going to announce their layoffs and their reorganizations. That might give us a little bit of a boost. Watch for United and Delta to continue going down. I see Delta probably getting a little bit of support at the $30 level, but that is still you've got an 18%, 17% drop from its current price this morning. So watch Delta to continue its pullback, and that's a little bit of just coming off that frothy. On the bullish side here, Tesla. If you didn't see it this morning, Elon Musk said there was a memo that was released. Elon Musk says it's time to bring Tesla Semi to volume production. This, of course, is because of they can hear somebody coming up on their back door here, the steps coming up on the back door with Nikola, NKLA. They just IPO'd. The stock is actually setting in their infrastructure for on the East Coast. They're working right now. They're focusing on that. They've got a hybrid that's electric and hydrogen. They're doing all kinds of things with the semi trucks. And I think it's a very exciting thing. Obviously, Tesla's taking note. Elon Musk wants to own everything that's electric, and you can't blame him. And the guy's got the production facilities to get it going. They're going to start building these, I believe, in Las Vegas. Watch the stock to break, obviously, above the $1,000 level and continue going. Don't bet against Elon Musk. I've done it before. It doesn't work out that well. So keep an eye on Tesla as it takes out those highs from what we saw back in February. 950 is going to be a big deal. That's why you're seeing it do a little bit of a stutter step here. As soon as we break through, I think you're going to see more analysts come through with positive comments. So I'm going to hit you up with the shameless self-promotion. I mentioned it yesterday, Thursday, June 18. I think it's at 3:45. We're doing our night trader roundtable. We're going to hit everything from the reopening of the markets to summer investing to trading the strong fourth quarter. And most importantly, I'm going to set you up for a hedging 101 discussion that we're going to have in July. Really fun time. We go through stock charts exactly the way we do here. I go through them in a little more detail. Love it. So now we're going to hit your ticker symbols. Got maybe we're going to put a limit of 8 minutes on here. 8 minutes. So start throwing them up. I see one right now. Aline's asking about Royal Caribbean. I'm already going to tell you that this is one of those that you sell into the strength that we've seen here recently, not because I don't think that they can go higher. I do think they can go higher. It's just they've gone too high too fast, just like the airlines right now. Look for it to break down. I think 60 is going to see a little bit of a test here. Initially, though, or eventually, I think you trade down to $55 on Royal Caribbean over the next probably 2 weeks or so. And this is going to be people taking their profits from what they've made. Think about it. If somebody put money just a couple of weeks, and I'm just going to pick a random day into, and somebody's going to chirp about my chart bars here in a second. So there you go. If we look at where we are right now, 68%, it's gone up in what? That's 10 bars. So 2 weeks I actually hit here, which is incredible that I got a 2-week period on the button. 68%, the stock is due for a little bit of a pullback. 55 is the target that I've got on it. I am going to scroll up now because you guys have gone crazy. Are there any Q&As in there as well? I want to see. I've got 7 Q&As, so I'm going to hit the next 4 tickers. I'm going to hit some Q&A, and then I'm going to come back and finish up your tickers. So let's look. Where do we go? Work, Slack, pulled back yesterday. We have a position in the night trader in it. NASDAQ, actually, let's see what Slack is doing pre-market. Still bouncing above that $30 level, which is exactly what I told you we're going to hold at. We're looking to hold above that $30 level. The stock's up 1% right now in pre-market trading. You can see the support that we've got at that $30 level. This was the earnings drop we played into. Wanted to break above that 20-day, and then I'm looking at a $35 to $36 target on it, which is going to put us well in the money on that. TJ Maxx, I don't know what I can say about TJ Maxx other than I still like it. Below 5 got an upgrade today, by the way, and I think you'll start to see it move along with the discounters. It's been slow to come up, and I think that's because they're a little lower on the chain in terms of what they can buy inventory-wise. TJ Maxx going to see support at $56 start to play out for the stock. I think this is a little bit of a rest. The stock has obviously been moving higher much faster. The stock is up 1% in pre-market activity. Doesn't say, I mean, the rest of the market is, flat to, unless you're in the NASDAQ, much higher. Look for it to take out. You want to see the $59 level taken out right now. We are coming off an overbought reading, and the volume did slump on us. So that's why we're seeing this little consolidation. Worst case, I think you see it move down to probably 55 as another level of support, and that's right around in here. You've got a put. Did I say no? You've got a call expiring on June 19th. Look on this next move higher. You could see a little bit of pressure on that call. Look for this next move higher. If you get a poke up above that 58, that's where I would be taking a position out. ALK, Alaska Airlines. And we're taking a second to come up. Like the rest of the airlines company, it has been in fuego. We're overbought on the stock. Right now, I suggest pretty much any of the airlines, you take a little step back and let them breathe a little bit. If you've got a nice profit, it's not a terrible thing to take it or operate with a stop loss. This is one of those where if you had a trailing stop loss coming up, you'd get stopped out on one of these days where you vacillated maybe 7 or 8%. But at the same time, maybe you leave it a little looser. I like Alaska Air over the long term. You know what? This is one of those smaller airlines that people don't pay much attention to. Take Southwest, but a little smaller than that. It means they've got smaller balance sheets, smaller debt. Also means they have smaller income or revenue. But at the same time, I like it because they're able to be a little more nimble in this environment. XRT. Retail sector right now. This has been one of the amazing trenders. You can see the pull up here as we had American Eagle, Abercrombie and Fitch, Gap, all these stores that are opening in malls. Now, I did see an interesting report this morning as I was reading about the retail sector. Now they're expecting somewhere between 30 and 35% of companies in the retail sector to go away. Macy's locked up their future with their huge credit pull. They took down a credit offering, and they've probably bought, my gosh, at least 2 or 3 years worth of credit now, or they've got enough liquidity to go another 2 or 3 years. They're going to be able to restock, reload, and try to get out there and continue changing their company. So, reports of their death were a little over exaggerated. And I was one of those that was looking at it saying, hey, this is a company that's in a huge transition at a bad point in time as they move from Cincinnati. Look for the retailers to drop a little bit of the froth. This is the hot trade, though. This is part of the reopening trade that I think you're going to see continue. Not as much as at risk as the airline stocks, which are right now just way, way, way too high. Let's switch over to just a couple Q&A questions real quickly here. Now you're up to 11. Any recommendations for 5G? I always keep telling everybody about Neophotonics. That is my favorite stock. Jumped up about above $10. It's pulling back right now. Try to grab that at $8. Facebook is pushing all-time highs. Should I buy, hold, or sell? You know what? Facebook is doing a good job, and you have to think about Facebook along with all the other media companies that are out there. Gray Television Network. You've also got Nielsen that you have to consider in this, New York Times that you have to consider in this whole group. And it's odd to put Gray and the New York Times in the same category. But political spending is about to go through the roof here as we see things heat up. I think you stick with Facebook right now as a hold if you already own it. If you're buying it, I think you buy it with the idea that it's going to do better than the market, but it's equally at risk, especially as we get closer to the election. Keep a trailing stop after you get up 10% or 15% on the stock, just so that it doesn't whip around. Whether you like it or not, Zuckerberg is playing the middle on this political hot potato when it comes to what you're allowed to say and how you can say it on social media. And I think he's doing a good job of again, hugging that middle right now. And I think for that, the market's not going to punish him. They're breaking out of this range here that we've seen here. Watch for the break above 240 to start getting more buyers. Look at how the volume's been dropping off. But that rally we saw yesterday started to bring more buyers in. I like Facebook as a whole. Vegas had a good weekend. MGM opening up 3 more casinos. Casinos are going up. Yes, they are. But let's put this little footnote or allow me to hedge myself here. This is an overbought situation just like the airlines, and you can expect to see them do it together. So right now with MGM trading around $22, let's look at Las Vegas Sands, LVS. See how the name... excuse me, that you should be looking. Not as much. MGM has been a little more aggressive on the openings too, though. So MGM right now sitting around that 22, 23. I think this is a point where you again, either you've got a trailing stop in on it, and if it does go higher, that's fine. You remain in it. But if it does stop you out, put in a buy at $18 or at $17.50, somewhere around there where you saw this bottom happen. Because again, everybody's on pins and needles, and the first time somebody sneezes in the middle of one of these casinos and they claim that, COVID-19 is now spreading in a casino, you're going to see people get away from the stocks and lock in more. It's not about getting out of the stocks. We're traders here. It's about locking in a 40% move in less than 2 trading weeks. That's what it comes down to. So, and when I talk about these stocks being overbought, it's not that I don't want to hold them or I won't buy them in the near-term future. It's just that you have to let a little bit of the air out of the tire before you get on the bike and ride it here. Otherwise, it blows up on you. So let's hit a couple more. Looks like we've got a few of the tickers in here. UCO, let's hit UCO because we haven't, even though we've been talking a lot about the oil trade, we haven't hit the Ultra, the Bloomberg Ultra oil. Right now, I think you look for a little bit of a pullback, and this is so hard to see now just because if we had a logarithmic chart, you'd see it a little bit better. Uh-oh, I hit on the options, my bad. Let's not go into that. UCO right now, I think just along with the rest of the crude complex, you see a little bit of a pullback in these shares over the next couple of weeks especially. We got that announcement from OPEC Plus out of the way. There's your rally that you've seen in UCO. 50-day in play at the 2766 level. Watch for that break to probably take you down. Again, just like everybody else, another 15 to 20% or so. And this is obviously they reverse split this because it was trading well lower than that. Popping over to the chat for just a second so that I can pick up with a couple of these. Let's look here. Oh, Alex is bringing up Expedia. Great. You know that I like Expedia over I like the strict play on the airlines. They're getting money from the airlines, obviously, from the hotels. They're the aggregator for travel stocks right now. So love the fact that it's pulling back because it did get overbought. I like the stock at $80. That's trading down 10% from where it is right now. I think if you want to buy it, that's a great place to set your limit prices. Did I get everybody there? I did. Let's finish up the Q&A. I'll give you one more minute. I'm going to go through the Q&A and MVIS. You know what? I may not be familiar with this microvision. I'm not familiar with this. Therefore, I'm not going to be able, and it's trading at buck 20. I'm not going to be able to give you a great view on it. I like the chart quite a bit. So I'm writing down the ticker symbol right now to see what we can find out between today and tomorrow. Volume kicked up on it, overbought right now. Love little stocks like this every once in a while. They're exciting to play. I need to know a little more to actually give you a firm read on it. What's up with DPW? DPW. So DPW Holdings, give me 2 seconds on DPW. I'm looking up headlines real quickly. So you've got some defense orders that are coming in for DPW, which watch for, not to take it away from DPW, watch for some of these defense stocks. CACI is one of them that I really like. Watch for some of these defense stocks to start popping again. Now that you've got a little bit of attention on Boeing, look at the a couple of the, well, I pulled up the IYT instead of Boeing there. Look at some of these defense stocks. You know what? I have to look a little further into DPW to give you a really good read on that. Not sure exactly where they are going. Naveed, TJX, looking for that pullback to end here in the short term and then for it to continue going up. What will stop Home Depot from continuing to go up? Andrew, that's an easy one. You've got to see the housing market slow down, and that's not going to happen for a little bit of time. I think Home Depot and Lowe's right now are stocks that are very hard to buy, as you pointed out. Look at where Lowe's is trading, 130 right now, Home Depot. And this is another one of my fast profit trades that I gave months ago. Home Depot, 256. They're on a rail here, and they're low volatility. I think that you continue to watch it. Another one of my favorites in the home builders related area, Trex, starting to look like it's going to bounce off that 120 level. You're going to have to see the housing market to slow down before you trade it in either direction. If you want to trade it higher, I think you do it very carefully because this stock is really overbought, and I'm not sure how much higher it can go without a little pressure. One more, Callaway, ELY, one of my, this is not a reopening story, but it's a getting back out on the golf course. Got compliments actually on a pair of Callaway shorts I was wearing yesterday, of all things. Look for Callaway to pull back, overbought. $16 is where I like the limit price to be set on this target of $20 over the next couple of months. Doesn't get much more simpler than that. AMD looks like it's going to be gapping up. Do I think it's going to rise throughout the day? That's a pretty hard one. Just like it's hard for me to guess your name when you're anonymous. So it's hard for me to say anonymous. AMD is one of those stocks, obviously, that has been a standout here just yesterday with the against the semiconductor sector. I think that we're falling into a cardiac trade here in terms of it going sideways, a little bit of a punch down. You had a pennant that was forming here. You broke it to the upside. It suggests that we're probably going to try to make a run at 60. At the same time, overbought. Semiconductors are going to be the first area that are going to get hit if we start to see some selling. So I think that you sit on the sideline and wait for AMD. I don't think that this is one that you trade on the short term. That's it. We made it through everything. Watch the Fed, 2:30. Jerome Powell does a great job. Yes, CHK is, they announced it yesterday. They announced it, we actually talked about it, I think, on Monday. They said, people are buying these stocks that are getting ready to, and Chesapeake's, and then within hours they announced their bankruptcy. Watch it though, because people are buying these stocks. JCPenney, Pier 1, I mentioned. They're buying these companies that are going bankrupt. Remember, the shareholder is the last person in line. And a lot of these companies have a lot of debt. So the bondholders are going to be taking pennies on the dollar here. That leaves little to nothing so there's a shareholder group that's actually looking to sue Hertz, saying that they should have they should get some money from whatever Hertz ends up settling with. And that's just not how it works. And it's lined out in prospectuses, which many of us don't read. Every once in a while, I still read one. But tells you that you're at the end of the line and you're not going to get anything if the food runs out, unfortunately. And so watch yourself on some of these energy companies right now. We're still going to see some more contraction, even though oil prices are going higher. Global demand still in question for the next 6 months. And I think you're going to see some of the smaller ones go away. Hopefully it'll be mergers and acquisitions by some of the larger ones. But at the same time, be careful playing with those companies that are really tinkering on the edge. All right, that's it. 2:30, watch the Fed. Fantastic having you guys. Always enjoy it. 11 o'clock for my night trader people. I'll see you then. Where's John? We haven't seen him in 2 days now. Hopefully he'll be with us tomorrow. We'll see you guys tomorrow at 8:45. Have a great day, and I wish you the best trading success every single day. Bye-bye.